Let's just talk about cryptos really briefly. Sentiment is really bad, not just because of the price. Obviously, the price is down, but we know prices go up and down. There's always cycles. But sentiment is bad also due to the fact that a lot of crypto banks are not doing well. They're imploding. They're going. Celsius just filed for bankruptcy. Voyager. A lot of people lost their money in these cases. So now they're feeling. Yeah, it's people are a little bit skeptical of the space now. They're a little bit. It's going to take some time before confidence goes back and they're ready to deploy capital back into the crypto space. What do you think?
Well, there's like the lovely word of metaverse. So you have this crypto metaverse, and within it, a lot of people made money. And all of a sudden, they want to get dollars to pay bills, and they come across into our real world, you and I function in our metaverse. And the big problem with these, a lot of them, they lost a lot of money. I know people in the cryptos lost, young people lost millions of dollars, but it was all crypto money. It kept rolling over. The dangerous part is they came across that membrane and they came into the real world. They took money like Celsius from people looking for higher yield and selling this high yield. And they were functioning like long-term capital. But long-term capital had only institutional money, not retail. These guys took in retail money and they promised these high yields and they were leveraged 100 to 1. That's just a recipe for disaster. And whenever I was criticized because Hive Blockchain didn't post up its $150 million of cryptocurrency, so we could earn a lot of money on this. And I would get phone calls all the time, David, well, give me your Ethereum, we can make you a lot of money. There was no assessment by these people on counterparty risk. We never gave them our coins. We never pledged our coins. And that was an important part because we said, this has just got this own systemic risk to it. And now it's imploded. It's just like the tokens were in 2018. The SEC went after all those pump and dump token coins. They're now going to go after all these highly leveraged players that promised these high yields. There's a Ponzi scheme they were running. But Bitcoin as a self and the Ethereum network continues to grow. It's interesting that the number of wallets actually grew with more people coming in to buy as a discount. So I don't remain, what's the word? Exceedingly bullish. I think it's got to have wounds healed over the next 6 months, but I think the worst is behind us.
You just to close off the argument here, you discussion rather, you use the word Ponzi scheme. We don't know for sure if these were Ponzi schemes, right? That's what the accusations are.
Yeah, but how can you earn the yield? Like you have to produce something. And so what were they producing? As the money was coming in and as crypto prices were going up, it was easy to continue that chain of paying money. I just don't know where all of a sudden they were promising 12, 15% yields. And that could only happen while money was coming into their systems and only while Bitcoin Ethereum was going up. So what happened when it went down? That's what a Ponzi scheme is. I need more money to come in to keep the game going. Okay. We mine Bitcoin and Ethereum at Hive. We just have a bigger profit margin. Bitcoin and Ethereum go up. It goes down, it shrinks.
Right.
It's very different business model.
Is it a different? So some people are conflating the two. Some people are now saying, well, they've always been saying, but more people are saying now Bitcoin in itself is a Ponzi scheme because when you think about it, when the price is only high when sentiment is high, and then when sentiment's low, people withdraw cash and everything falls apart. And you see where the price is at now. How would you respond to that?
Bitcoin is so much like gold, and all you got to think of is gold's digitized. And that's what Bitcoin is. You have to buy equipment to make it, and you need electricity. So the same thing you need of a gold mine. I have to go and buy tractors and machines, and I have to go drill and take it up, and then I need electricity to separate the gold from the rock and crush it down, and it's a separation process. So I make a gold asset. A digital asset is very similar. Now, when you do proof of work, it's creating a digital asset. But proof of stake is a platform for just printing money. And that's the whole debate of the SEC going after Ripple, is because they issued all these tokens themselves, and they could sell them, and there's no governance, there's no controls and mechanism.
Yeah.
But there's no application of electricity and heavy equipment to make that digital asset like it is to make a gold brick.
Okay, good. Well, we look forward to having you release your new gold book. We'll have you on before the release in September, obviously. We'll have you on before then to talk about the theme some more. But exciting to talk about your new book, and happy to have you on the show today, Frank. Thank you for your thoughts.
All right. Stay positive.
All right. And thank you for watching Kitco News. I'm David Lin.